Are you an active real estate investor and you want to get into apartment building investing, or at least you're considering about it to scale your real estate portfolio, but you're on the sidelines right now because you're worried about the high interest rates? Certainly, people are not buying single family houses because interest rates are higher and they're waiting for them to go lower. And so you are waiting for that interest rates to go lower to get started in scaling your real estate portfolio. But let me tell you something. High interest rates actually don't matter. Now, if you stick around, I'm going to explain to you exactly why. And this should not be a reason that you do not get into apartment building investing. Hey, my name is Michael Blanc, and I help people become financially free with real estate. Our investors right now are afraid to invest in real estate in general, certainly single family house rentals, right? Because interest rate's gonna come down, so I'm gonna get a better price. And that may be true for single family houses, but it's not true for apartment buildings. But here's why the high interest rates don't matter. Number one, you're gonna build it into the underwriting. In other words, you're gonna have a financial model. We use a syndicated deal analyzer, for example, to do that. You're gonna put in the high interest rate. For a safe measure, you might actually project that interest rates go even higher, which you're not projected to do, but let's say you do. And then you're buying based on that higher interest rate, which means that you have to get a lower enough price so you can still achieve a return for your investor. You put in the underwriting and you buy accordingly. Number two, then, you use fixed rate debt. So it can't go up. If interest rates were to go up, well, they don't go up because you fixed it. So now you're already buying right. You're already buying at the price you need for the high interest rates, and then you're fixing the interest rates. This is why the high interest rates don't matter. Okay, they don't matter when you're buying it because you're putting in the underwriting. Just like if you're concerned about that, you're hurt about high insurance costs. Oh my gosh, what am I going to do? Well, you put in your underwriting. And let's say you make it go up 20% a year, which it has. You put it in your underwriting and then you buy accordingly, which means you're going to have to get a lower price for that. Now, sellers are starting to understand that. They're like, oh, I can't get the price I wanted in 2022 anymore. The market has changed. Interest rates are a lot higher. Insurance are much higher. Therefore, my value of my building has dropped. And now you get to buy it at a lower price. So this is really why high interest rates don't matter, because you're going to put it in the underwriting. So what does matter, though, what you really need to pay attention to is getting the right debt. The right debt is everything right now. So, for example, having a fixed rate debt is very important. Trying to get as the highest loan proceeds you get right now is very important because, well, there's very low loan proceeds right now. The loan to value is very low. The leverage is low, which is also less risky. It also hinders our ability to get into deals as well. So what kind of loan product get into? I think the people who get the better debt right now are able to pay a little bit more and get the deals. It's all the debt right now. Now we're far away from the debt where we're getting 2 years ago, where we're getting 90% loan to cost, where we're getting 90% both of the purchase price and also the construction. We're light years away from that kind of stuff. But even 5% more leverage, for example, has a huge impact because now you have to raise 5% less equity, which means you pay a little bit more, you're a little bit more competitive. So working with a broker is absolutely critical right now, and really networking a lot on the broker side and getting access to different loan products right now. There's a lot of movement in the lending market, so getting access to different kinds of lending products is absolutely critical. So really focus on the debt. Key takeaway from this video right now is don't wait for the wrong reasons. Okay, don't wait for the wrong reasons. Oh, interest rates are high, I'm going to wait. No, that's a mistake, because what's happening right now is there's actually a buying opportunity happening right now. We're seeing some sellers come off their price. There's a little bit of distress in operators who haven't been doing well and they can't deal very well with the high interest rates. There's opportunity right now. So what you want to do is you want to start getting your education now. You want to start building your team now. You want to start talking to brokers now, because this buying opportunity is going to happen in the off-market space. You're not going to see it on LoopNet. You're not going to see it in the news. You're going to see it with brokers. So get your education, build your team, and get started right now. Don't use interest rates as an excuse not to get started. So what I'm going to do is help you make the better decision about your real estate investing. And so I created a free course called Apartments 101. And it gives you introduction into syndication. The cool thing is you don't need previous real estate experience. If you have it, great, but you don't need it. You can get right into apartments for the reason I explained in the course, in the free training. And you also don't need a bunch of money in the bank because you're going to raise it as well. So check out that free masterclass called Apartments 101.